Bitcoin is currently crashing, recently dipped below $75,000 for a little bit of time, and we've got a jam-packed next 72 hours for us. No, that is not clickbait. The next 72 hours is going to be absolutely wild for both Bitcoin and all of your altcoins. We're going to talk about that in this video. We're going to go over some really important economic data, and I'm going to give you my thoughts on the cryptoverse, because if there's one thing that I do really well, it's this macroeconomic data. So we're going to talk about all that in this video. But before we get started, welcome back to the channel. My name's Doc. Throughout the day and super late night, I'm a resident physician, and throughout the day I take you guys on my crypto and investing journey. Okay, wild. Clearly I'm tired. It's been a long day. The markets are doing all types of crazy things. Let's just go ahead and jump in. I guess before we do get started, if you don't mind, let's give me a preliminary follow. I don't know. We're kind of going to take a little bit of a laid back approach on this one because we have to. The market's dipping, right? We are on the 4-hour chart here. Bitcoin currently right around 75,000. We did wick below into the 74,000s. And that is because you're probably thinking like, oh, Doc, what's going on? The stock market futures right now are negative, right? We're down 2% in the close. This can change quite a bit, but we are negative. And that's because the China tariffs go into effect in less than 2 hours, right? 104% tariffs on China. Trying not to get political, just trying to be independent, neutral here. Obviously, that is what is causing the market to fall down, though. So you might be thinking, okay, Doc, what's happening next? We're at 75,000. We wicked down to 74. Well, I think the big thing is we really need to respect this white line, and that white line is the 50-day moving average. We've been below it the past couple days, and it's just acting as resistance. Meanwhile, as this is all happening, Bitcoin dominance. It was at 64%. We've just been riding this train all the way up, and it makes sense, right? Bitcoin dominance is going up, i.e. Bitcoin is showing more strength. What a crazy drawing we have here. Bitcoin is showing more strength compared to some of these other alts. Let me get a little bit cleaner chart up here. This is the one that I want. Yep. So it's just a lot going on. There's a ton of uncertainty happening right now. So what do we have to look forward to this next week? Because I said in the beginning of the video, the next 72 hours is going to be crazy. Well, we have an FOMC meeting minutes tomorrow. So what that means is the meeting minutes from the March FOMC meeting are going to be released. People are going to be going through this with a fine-tooth comb, myself included. And I can tell you right now, although the meeting minutes are usually good, all of these crashes has happened since the last FOMC meeting, right? So it could be outdated in a lot of ways, right? We're going to talk about this in a second, but I do think we're going to get rate cuts, and they're going to be happening really quick. We're also going to get some inflation data on Thursday and Friday, the CPI and the PPI, respectively, Thursday and Friday. So this is just going to be really big, right? Like a lot of things are going to hinge on this, and you might be thinking, well, like, hey, Doc, things are already bad. Like, how worse can it get? Well, let me tell you, I'm not as concerned about the FOMC meeting, but if CPI inflation comes back hot on Thursday, that could send markets down even farther. Now, if CPI data comes back at expectations or cooler than expected, it could keep the market neutral. And I'm using the word neutral for a reason. If we just look at the S&P 500, it's going down, right? The negatives, we're down 2% in after hours right now. It's been brutal, right? So we need to be watching this really closely. Thursday and Friday are going to be big. Plus, we have all these fears with the with the tariffs and a Freudian slip, because we're going to talk about recessions. But just like a lot of really big data coming out. The big thing is we have an FOMC meeting on May 7th, and this is wild, right? This number, so this is the projected rate cuts for the FOMC meeting, May 7th. That's approximately a month from now, and it's about a 50-50 according to the CME FedWatch tool, right? A 50, or to be technical, and to be technical is the best way to be, there is a 49.8% chance that the rate cut stays that the Fed interest rate stays exactly where it is, no cuts. There's a 50.2% chance that we get a 25 basis point cut, i.e. a fourth of a 1%. Now, you might think like, oh, this is okay, 50-50. These numbers have been just going absolutely wild the past couple of weeks. So this is not what I want to look at. I want to look at the compare tool. So don't get confused by this. I know you're seeing a lot of different charts. The dark blue line, this is the most current. So right now we're at about a 50-50. Guys, about a week ago, there was an 80% chance that there would be no rate cuts, right? So clearly this has shifted from an 80% chance of no cuts to now a 50-50. More importantly, when we look at the aggregated totals, again, don't get confused by this. This is not complicated. This is where we are right now. 4.25 to 4.5 is the federal funds interest rate. At this next May meeting, there's a 50% chance that we stay where we are. I personally think, normally I give you my opinions at the end of the video, I think we're getting a rate cut in May. I really do, because I think the stock market's going to fall down tomorrow. I think the Fed chair is kind of going to be forced into doing this, even though they may not like want to. The really interesting thing is if we go all the way out to December, and it's actually a horrible idea to project this far out because, right, things change quickly, as we just showed on the previous slide. There's approximately 5 rate cuts, 4 to 5 rate cuts programmed for 2024. Personally, I think this is going to be closer to 3 to 4, but ultimately, this just depends how long these tariffs are going to stay in place. Now, we just said there's roughly a 50-50% chance that the rate cut stays exactly where it is. Well, poly markets, they're not buying it, right? Or they're behind because they're saying it's not 50-50. They're saying there is a 65% chance that we do not get any rate cuts. Personally, I think poly markets is behind and people haven't updated their bets. And I'm saying bets because that's exactly what this is. People are putting real hard time money that these rate cuts happen, right? So it's people kind of voting with their pocketbooks, put differently. I just don't think this is updated, especially because of the fact that these numbers are changing really, really quick. So, right, we're a month away from the next FOMC meeting. I know this might seem like a long ways away. The reason that we're talking about it now is because the next 72 hours, again, that's not clickbait, is really going to dictate what happens at this FOMC meeting in May. Well, guess what? That's not the only thing that's going to change things. The Fed Reserve Bank of Atlanta, right? They're projecting a negative 2.8% GDP for Q1, right? So what they're saying is gross domestic product for January, February, and March is going to be negative 2.8%. Now, this is just an estimate because this data isn't released until April 30th, right? So we still have 3 weeks before this comes out. Here's the take home. The classical definition of a recession is 2 consecutive quarters of negative GDP. Guess what? It's almost guaranteed Q1 will be negative. And there's probably a pretty decent probability that Q2 will also be negative, right? And the whole reason that I'm mentioning this is if we just go back to poly markets and we look up recession, they're saying, poly markets is saying there's a 64% chance that we have a recession. And we're going to talk a little bit more of that in a second. Let's just go to it now. Larry Fink, he's saying that most CEOs, it's their opinion that we're probably in a recession right now, right? So ignore this. I'm not showing this tweet because I think this. I'm just trying to stay neutral. More so just wanting to show that Larry Fink thinks that we're probably currently in a recession. Poly market tends to agree with him in a lot of ways because they're saying that there is a 64% chance that we get a recession in 2025. A lot of times, here's the take home. A lot of times, once a recession is officially announced, the bottom is already in, and the bottom's probably been in for a while, right? So just something to think about. The other real thing is, guys, and I promise I'm building a thesis here because I'm showing you all the negative things first, and then we're going to talk about the positive. Also, if you're getting any value of this, hit the like button, subscribe. It's totally free. It helps you out, helps me out rather, and it helps you out. It's going to push more crypto-related content to you. And comment down below, do you think we're getting a rate cut in May? Okay, Guide Your Capital, they're saying things are getting wild. So the first half of fiscal year 2025, and guys, keep in mind, fiscal year 2025 actually starts towards the end of 2024. I believe it's October, if I'm not mistaken. They're saying that we produced a deficit of $1.31 trillion. That's roughly $250 billion more than where we were last year. So we're on track for a $2.6 trillion annual deficit. Wild. We are spending way, way, way more money than we're taking in. And I think that is the thesis of these tariffs. Again, I'm not saying I agree or disagree with them. If you guys have been following with me, you probably know that I have like a somewhat neutral stance on it. I think there's positives and benefits. that there's pros and cons rather to both of them. It's late, right? I've had a long day. The charts have been going crazy. We've been in the Discord doing all the things. We're really following the market closely. I'm going to plug the Discord here again in a second, but we're just spending way too much money. Tariffs theoretically are supposed to bring more money in. We're going to see how that plays out, but nonetheless, US, we are spending significantly more money than we are bringing in. We talked about this real quick. Also down below, if you want to trade these markets, my BTCC link is going to be in the description. You're going to get a 10% bonus on first-time deposits. No KYC, no VPN. You can use stupid high leverage too. I never do 500x leverage. I think the most I do is like 50, but that really is a gamble in a lot of ways. So yeah, if you use this link, it does help me out. Okay, the other like kind of negative thing is tax day is about 1 week from now. It's actually exactly a week from now. I'm filming this super late on Tuesday. It's probably Wednesday where most of you guys live, but nonetheless, Bitcoin historically shows weakness on tax day, right? And that makes sense because unfortunately, a lot of people over leverage themselves or overextend themselves, spend too much money on crypto, and then realize, oh gosh, I have a fat tax bill that I need to pay. So I would expect a dip going into this with the next week. And you're probably thinking like, Doc, that's the last thing I'm worrying about right now. Are these tax day, as we got these like huge dips in the market because of all of these tariffs. I'm just putting it on your radar. I want you to be aware of it. Okay, this is like another bad thing that we kind of have to worry about with the economy. So the 10-year yield note is going up, right? It's actually been like spiking quite a bit as of recent. And this is bad because the 10-year treasury yield note, this specifically tells us this is like what dictates mortgage interest rates, credit card interest rates, auto loan interest rates. So that's going up. And another way that could be interpreted is the average everyday consumer is getting squeezed more. This is also happening in parallel with the S&P absolutely nuking, right? Absolutely nuking. So we're saying treasury yields, they're up 10% since April 3rd, and the S&P is down 10%. And you might not think 10% is a lot. It is a ton in the traditional stock market, especially since it's been only a week since this has happened. And I'm saying stagflation has entered the chat. Obviously, there's a lot more to it, but this is not a good sign nonetheless. Okay, so we talked about FOMC meeting minutes tomorrow. That's at 2 p.m. Eastern, 1 p.m. Central Time. That's where I'm at, so I'm putting it on my calendar there. This could be good or bad, but I will say that these meeting minutes are for March, and a lot of this shenanigans, it's happened already, or it's happened since then, right? So the meeting minutes might really not encapsulate or include a lot of this recent sell-off that we've had in the market. Also, down in the description is going to be my website, InvestWithDoc. If you want to get to know me a little bit more, you can put in your website. Really do appreciate all of the help or support, rather, from you guys. Channel's growing really well. We're closing in on 7,000 subs. I'm going to give you guys my kind of 2 cents, as I like to do at the end of these videos, if you made it this long. Okay, we're going to see weakness in Bitcoin. And a lot of people, if I had $1 for every time someone said, hey, the tariffs are just a negotiating tactic, they're probably not going to go into play. Well, guess what? We've crossed that threshold. They've been signed. The 104% tariffs are going into effect in like any minute now, right? Like literally any minute. It spooked the market. Futures are opening negative. It's tough, right? As far as crypto investors go, myself included, we need to really have a risk-off appetite. What does that mean in layman's terms? Only buy big chunky projects, right? I'm mostly Bitcoin right now. I do have some Ethereum. You guys know what projects I like, right? Big chunky plays. I'm not in risk on assets right now. Or if I am, they're like less than a percentage of my overall portfolio. I'm really investing in like the top 100. Here's the thing though. I'm saying what I'm doing. Again, this is not financial advice. I'm not a financial advisor. I'm operating under the thesis that the bull market is not over, right? I'm assuming if you're watching this 15 minutes into the video, you probably assume that as well, right? That the bull market is not over. Now, I don't have a crystal ball, right? Surprise, surprise. So I don't know what's going to happen, but I do think crypto prices will be higher 6 months from now than they are today. So that's my thesis, right? I'm also buying like a ton of stocks, and I have been buying a lot of stocks as of late. Okay. And I'm gonna give you guys a little secret sauce here. If you're in the Discord, you already know about this. Link down below is going to be there'll be a link down below to the Discord, completely free. We have nothing to sell you, but I'll reward some folks if you made it this far. SMST. This project up 22% today. Okay. This is a 2x short leveraged ETF play on MicroStrategy, right? So I sold out of this, most of my shares within a day or two. And the reason that I did this is because as MicroStrategy goes down, this goes up, okay? So as MicroStrategy goes down, this goes up, and vice versa, okay? If MicroStrategy goes up, this goes down. The whole reason I'm bringing this up is eventually I do think Bitcoin's going to recover. I really, really do think that. So if Bitcoin recovers, okay, and I just realized I'm not sharing my screen, but that's okay. I can share it real quick. So boom, SMST, this is a 2x short on MicroStrategies. So right, today alone, they were up 22%. For the week, they're up 47%. And that's because MicroStrategies is shitting the bed. So I've sold most of these shares. Here's the thing. This is vice versa. MicroStrategy goes up, this goes down. If Bitcoin recovers, which I do think it's going to, MicroStrategy will go up. And that means SMST will go down because it's a 2x short, right? So if this craters, if this gets back into the $2 range because MicroStrategy is ripping and it's $400 or $500, I will be rotating crypto profits into this, right? Again, if you want more info on this, jump in the Discord. It's free. We'll talk about it there. And I will specifically let you know when I'm making that transition because I'm not yet. So we're 17 minutes into this video. This is me rambling. The take home is this, the TLDR. The next couple days are going to be crazy. We got Fed meeting minutes coming tomorrow. The tariffs are like officially into effect with China. We got inflation data coming out Thursday, Friday. Expect volatility. And guess what? The volatility is probably going to be here for a while. The other thing is Bitcoin needs to stay above, it needs to stay, the simplified version, it needs to stay above 70, right? You're going to hear some people say 73. That's kind of what I subscribe to as well. It needs to be on a weekly candle. The take home is if Bitcoin goes below 70, we might have to just pack all this up. So anyways, if you got any value out of this, hit the like button, subscribe, comment down below. It really helps the algorithm out. Let me know. Do you think we're getting a rate cut in May? Where do you think Bitcoin is going from here? And I will see you guys in my next video.